This is the PKF Texas Entrepreneurs Playbook. I'm Jen Lemansky, and I'm back with Kimberly Wood, a senior manager on our transaction advisory services team and one of our approachable advisors here at PKF Texas. Kimberly, welcome back to the Playbook.
Thanks for having me.
So I've heard a lot in kind of the audit world about this new ASC 842, and it's a new lease standard. What exactly does all that mean?
Yeah. So in 2016, FASB issued Topic 842, which covers leases, and they subsequently extended that effective date with ASU 2019-10. So this update is effective for non-public entities with reporting periods starting after December 15th, 2021, which means that it was effective January 1, 2022. The update has potential impact on EBITDA in some rare cases and could also impact the initial metric often used for valuation of business acquisitions. It is unlikely that there's a material impact on the valuations, but proper due diligence should be performed.
So how will the new lease standard impact EBITDA and business sales?
Yeah, so under the old standards, ASC 840, there are two types of leases, operating leases and capital leases. Cash expenditures related to capital leases, reduced debt payments or the lease liability, and interest expense. Now, they also had amortization expense, which related to the asset put on the books at the inception of the lease. Now, under the old standard, operating leases, the expenses associated with this were a reduction of EBITDA recorded as rent expense and on a straight line basis. This is the same pretty much for the new standard.
Okay.
Now, the expenses were not recorded on the balance sheet, but the future payments were disclosed in the footnotes to the financial statements. The biggest change with the new lease rules and operating leases will be required to be recorded on the balance sheet. So that will be a right of use asset and a lease liability. One exception to this is if for the lease is for 12 months or less and it's not going to be renewed. Operating leases then will show as debt as the lease liability on the balance sheet, and potential buyers looking to make a cash-free, debt-free deal will want to take this into consideration in negotiating terms.
Well, that makes a lot of sense.
Yeah, it's easy enough, right? So it is possible in often uncommon situations that an operating lease will be, under the old rules, could be classified as a finance lease under the new rules. So as a result of this, that would increase EBITDA because then again, the debt, the cash expenditures would be paying the debt and the expense would be related to amortization and interest, which is subsequently deducted from EBITDA or added back to EBITDA, shall I say. So the update could also affect cash-free, debt-free transactions by increasing the amount of debt on the balance sheet.
So that's a lot of great information. What changes do companies need to make to EBITDA and the new lease standard?
Yeah, so while it's unlikely that EBITDA and value drivers will significantly be impacted by the new lease standard, we consider it important to perform proper financial due diligence related to leases. This can be done just with your typical buy side, sell side quality of earnings.
Perfect. Well, that sounds like a lot of information, and that our viewers should call you if they have any questions about the new lease standard and what lease accounting looks like.
Yes, for sure.
Perfect. Well, we'll get you back to talk about some more transaction-related topics in the future. Sound good?
Sounds great.
This has been another Thought Leader production brought to you by PKF Texas, the Entrepreneurs Playbook. For information about this and other topics, visit pkftexas.com.